Hello and welcome to Bazaar Morning Call. We're starting another session today. I'm Prashant. With me, my colleagues Sonia and Nigel. Guys, hi. Good morning.
Good morning.
Things are looking a little weakish this morning, aren't they? I mean, you've got the US, which is sold off. The S&P and the Nasdaq both are down between 1.5% and 2%. And, the market in the US did not react to data on Monday. That was Friday's data, which is, of course, the jobs report. But they did react one day later. And this is something we were talking about yesterday as well. This one-day gap has taken place many times before. But does this change this upward grind that we've been seeing in the US? That's the bigger question, apart from what happened last night. Yields and dollar both pushed higher, and oil sold off about 3%. The SGX Nifty futures, of course, will come up on your screen, and that is indicating a slightly lower start by about 70 points or so, 18,740. Sonia, hi. Nigel, hi.
Hi, Prashant. Good morning. Nigel, morning. So we're starting on the back foot, right, this morning. At least that's what all the indications are in the market. SGX Nifty, as you said, 70 points lower. And it was a steep slide. I mean, almost a 500-point slide is what we saw on the Dow. As Prashant was also mentioning, now the expectations are that in the December Fed meeting, there could be a 50 basis points rate hike because the data has been quite strong, whether it's the ISM data that came through, the labor market data has been good, the jobs report was strong. So the economy in the US is resilient, and hence perhaps they can go in for another rate hike. And that's one of the premise on which the market sold off yesterday. For our own markets, the FI selling once again has resumed. So FI sold about 1,140 odd crores. It's going to be a gap down opening. DI buying has supported it though, almost 2,600 odd crores. Around these all-time highs is where the Nifty is consolidating. The range, 18,200 has been a bit of a firm support for the market. At the upper end, all eyes will of course be at that 19,000 level. But there seems to be lack of any great positive trigger to get the market to above 19,000. There's the RBI policy tomorrow. Let's see. For now, the CNBC-TV18 poll suggests a 35 basis points rate hike. But the change in stance is something that even Lata was talking about yesterday, that perhaps the RBI could change its stance given the global uncertainties. If that comes about, how the market reacts. But as of now, even though the buy on dips continues, Prashant, you get a sense that there's no real major positive trigger because you're also heading into the end of the year, right?
Yeah, and we're losing people as we go into the end of the year, right? More and more people.
Don't say that.
Some are coming back, but others are going as well. So
be specific, losing them on holiday, right?
Losing holidays. I mean, absolutely. You said end of the year. The population dwindles to holidays. All right, let's just quickly run you through a few things. So, yesterday the market got an unfriendly reminder that the Fed's not done, right? You have the data in the US, which even now, and services, by the way, goods inflation is easier to get rid of as compared to services inflation, always everywhere. So we have services ISM, which came in stronger, and that is the unfriendly reminder that the Fed may have to. I mean, it doesn't change what they will do or how high they take the rate to. Although there is also a debate there. But they may take the rate to 5 and then hold it for longer, higher for longer. That's essentially the fear. In any case, I mean, I was at the margin. Things have been looking very constructive. The markets have been grinding higher. But for example, I mentioned the VIX yesterday, which was at about 19, right? I mean, April lows around the area where it starts to bounce a little bit. So it was getting a little stretched in the near term. So you've seen a pullback. The S&P is down 1.8. The 10-year yield has bounced about 10 basis points. And the dollar index from under 104, it's back above 105 now. So these are the three things. China reopening, and that's a market which has been shielded. By the way, last month, the month of November, we've got the Chinese market, which did 30% gains. Yesterday, the Hang Seng Tech Index rallied 9%. So China reopening story is kind of shielding, for now, only the Chinese market and maybe the commodity space, especially metals, from all that is happening globally. The dollar sort of rebound, etc. We'll see if that continues to be the case. Exit poll results came out yesterday. It's a sweep for the BJP in Gujarat. In Himachal, it's touch and go. It's very, very close. So we'll have to kind of see. The Nifty ended higher yesterday, and it was a positive close after what was a negative session for most parts of the day. So in that sense, the low yesterday becomes important, 18,591. That is the low point of the day, which is about 100 points from yesterday's close. The 20-day, if that comes in at about 18,417, which I think is the next level to which the market will look for support from. And Friday's high of 18,887, in case we see a big reversal, flourish, etc. I mean, I think that becomes the level to watch on the upside. Like the last many sessions now, like the last fortnight, basically, broader markets, mid caps and small caps are continuing to do well. Those indices were up just under 0.25% and almost 0.5% on the mid and the small caps, respectively. So the broader market is still doing and is still in a fine fettle. Now, what are you watching?
Well, the buy on dips has worked. It worked yesterday, and I'm expecting more of the same even today with a strict stop loss. Yesterday, we bounced off that 18,591 odd, and we ended in the green. Remember, Reliance Industries, the biggest way, didn't perform. But the banks and the financial stocks, well, they did good enough to take care of Reliance's underperformance. But the real story is in the broader markets, because the last few sessions, the broader markets have outperformed the Nifty, and I like that screen. But today is going to be the test for the broader markets in particular, because overnight cues are not that great. They've seen a recent outperformance, and also the exit polls, well, with regard to Himachal Pradesh, the polls are suggesting a very close contest, which maybe let's see how the street reacts to that. So the broader markets outperformance is going to be tested today. Two big events coming up. You have the RBI policy support coming in from there, and also the election results in the next 48 hours or so. So those are the big cues. On the futures and options space, well, yesterday you had some bit of unwinding on the Nifty futures, while on the Nifty Bank, there were fresh longs that were created out there. The Nifty Bank was up more than 200 points, and you saw the open interest as well that did move up. But the FIs, they lightened positions on both sides, on the short as well as the long side. However, what's encouraging is they wrote close to around 60,000 put contracts. And there was a fair bit of action on the Nifty Bank put side. So the 43,300 put as well as the 43,200 put, there were signs of writing at those levels. If that's the case, then you have support coming in at around the 42,900. And I say that because we bounced off that level in the last few sessions. If we break that, maybe we visit the 20 DMA. However, the recent high will be a bit of a resistance. Similar is the case with the Nifty as well. The 18,700 call has seen a big amount of open interest, so there is writing at that particular strike. The premium's around 100 rupees odd, so you plug that in, 18,800, 18,850 becomes a resistance zone. Yesterday, we saw some action at around the 18,450 put. So what are the levels you're looking at out there? In the near term, the 18,550 to 18,600, that's a crucial support zone. If you break that, maybe you visit the 20 DMA. On the upside, the recent high will be a bit of resistance. How do you approach trade? Buy on dips has worked, so stick to that. Try to get in around that 18,550 odd on the Nifty, and risk reward could favor you. Direction in the next couple of days will be given from the RBI governor and the tone that he gives out. So the SGX Nifty suggesting a pullback. Maybe if you get a bit of a deeper gash, as we saw yesterday, get in around that 18,550 and keep a stop loss at around 18,500. Risk reward could support you. What else, Sonia?
Okay, so risk reward could support you. Also, for now, crude continues to trade lower. So there was that 3% fall that we saw overnight in crude. Still well below $85 a barrel. So do keep your eye out on that. That's another important internal to track. 83.50 now on Brent crude. But for now, the SGX Nifty indicating a gap down opening. We'll see how it goes. Most Asian markets are also under a bit of pressure this morning, and there is that Fed December meeting. All eyes will be on that. A 50 basis points rate hike is what the street is looking at. But there is a lot of commentary coming in. Is the market back in risk-off mode? What do you do from here on? Gautam Dugar of Motilal Oswal expects the market to now track earnings growth. He says that moderation in the inflation print, coupled with the central bank reducing the pace of tightening, will keep the sentiment positive. He continues to be bullish on large cap banks, and their top picks include ICICI Bank, SBI, Bank of Baroda, IndusInd Bank, Infosys, HCL Tech, Titan, Jubilant Foods, Metro Brands, ITC and GCPL.
All right, some money market views now. So this is Kunal Sadani of Shinhan Bank, who says strong ISM services data for November rattled investors. He says data supports further Fed rate hikes, adding that Brent crude prices cooled off while the dollar CNY, that is the Chinese currency, continues to be below the 7 mark. The 10-year US Treasury yield slightly bounced back. He says corporate flows, oil bids and stops getting triggered pushed the dollar INR pair higher yesterday. For the dollar INR pair, Kunal says 81.6 to a dollar acts as a support, while 82.1 to a dollar is a resistance.
Well, there are plenty of stocks that we'll be tracking for you, and we'll get to that in just a bit. In our special Top 10 segment, we're looking at IRB Infra, Natco Pharma, Astro Micro, their stocks on the back of positive news flow. However, today we have more number of stocks actually will react to negative news flow. Bharat Forge, JNA Axles, Mahindra Financial Services, Shriram Transport Finance, Manappuram Finance, Muthoot Finance, and IEX.
All right, so that's basically stocks to focus on. Rupal Agarwal is Senior Research Analyst, Asia Quantitative Strategy at Bernstein, and she's joining us to take us through what her models are telling us. Rupal, great to have you with us here. Thank you very much. Exactly that. I mean, what are the quant models telling you? Basis the moves that we've had, the very large positive move here, relatively speaking, in India, and the subdued performance in overseas markets. How are things set up according to you?
So I think, Prashant, from our perspective, we do see that there are some positives which are emerging, broadly from macro risks, slightly moderating. If we look from inflation, print has come down, so there are signs of moderating inflationary pressures. But I think inflation, again, it really has to be driven by the fact that the Fed is likely to continue to hike, maybe at a slightly slower pace. So the broader point being that China opening up has clearly helped the sentiment, at least on the Asian market side. So there are these some positives emerging, but at the same time, I think there are still quite a bit of risks out there. I would say there is clearly a risk of a global recession as we head into next year. Earnings are likely to disappoint. We don't think we've seen the full extent of earnings downgrade cycle, which typically aligns with a recessionary-led cycle. There are still risks of yields moving higher, dollar likely to remain, again, more volatile in the short term. And if you look at from a valuation spreads in the market, we've not really seen any material changes in terms of the dispersion that when we started in the cycle. So because of those, some risks there, but, some positives emerging, we are taking this approach of being, cautiously optimistic, which is essentially we start adding some of the beaten down names. A lot of them will, of course, be more, from an Asia perspective, more in China, Korea, Taiwan. But at the same time, we continue, being more defensively aligned and especially playing it through the high yielding ones.
Okay, this is interesting. So you're saying that there is a risk of a global recession next year, but at the same time, the macro risks are moderating. It's a little confusing, especially when you're an investor looking to sort of, decide your asset allocation. In a market like India, what do you do, Rupal? Do you think that money could move out of India and into markets like China purely because of what you stated? China's a beaten down market, perhaps valuations look a little more comfortable there.
So, yes, I mean, that's always a risk, though I think the resilience that Indian markets have shown in recent time periods is something that one cannot really ignore. I think there are clearly tailwinds which are emerging for India, especially for the longer run, because of, again, what has played out from a geopolitical standpoint. There are clearly, supply chains moving out of China, and, India offers that potential, of both being a great production house as well as, more from a consumption perspective. So I think longer term tailwinds are there. There are clearly concerns around valuations when it comes to Indian markets. So that cannot be ignored. So shorter term, I do think that there are risks. One needs to be a little bit more cautious when adding more India exposure. But I think longer term, there are a lot of opportunities. And we did this interesting analysis around the 10-bagger opportunities. And if we look at, if we go back, since 1980s, what we've seen is that India actually stands out as the second biggest market across Asia to have produced, the maximum number of 10-baggers. So I think that's how probably India should be approached. Shorter term, yes, valuations look stretched, but I think there are tailwinds, which will work in favor of India for the longer run.
Hi, Rupal. Good morning. Nigel on this side. Rupal, I was reading your note and you're saying that China reopening, softer dollar, that's, helped on the sentiment. But earnings are going to be the driving force. For India, we're still working with, good mid-teen growth for the next couple of years. That's what most on the street are working with. What are you factoring in with regard to earnings for the Indian markets? And also, what's the downside risk out there? Because year to date, I haven't seen too much of an EPS cut out there. Your take?
Absolutely. So I think, consensus have been relatively more slower in bringing down their numbers. And honestly, this is not just an India-specific issue. This is something that we've seen across different markets. So there is this very significant divergence that we are seeing, in terms of where the expectations are and where the actual numbers are, coming through. Even if we look at from an India perspective, the way that we usually look at earnings is looking at, say, the trends in earnings revisions. And we did started seeing, some kind of a recovery from an earnings revision perspective. The rate of downgrades started moderating for India on an aggregate since May. But again, from October, we've started seeing, the rate increasing. So there is a likelihood of further earnings downgrades increasing. And if I look at from a sectoral perspective, financials is actually the only sector in India right now which is seeing net earnings upgrades. Every other sector is seeing a net earnings downgrade. And if we compare it to typically, some of the previous cycle bottoms that we've seen, we are much further away from those levels. So there is, yes, a risk to earnings. And I would say it is not just, as I said, in India. This is something that we've seen across, US, Europe, including most of the Asian markets.
That's interesting. One final question then, Rupal. You said financials is the only sector that's seeing earnings upgrades. What are the other pockets where perhaps, A, you're cautious on, and B, you see some scope of an improvement in terms of earnings? Just trying to understand your sectoral allocation in the Indian markets now, apart from financials.
Sure. So I think the way that we look at markets always is through the lens of styles. So as I said earlier, high yielding names is something that we prefer even in India. And it has support both from valuation as well as earnings. So the rate of earnings upgrades are actually increasing there. So that is one pocket to be more positive on. And if I then tie it in with the kind of sector exposures that you'd end up holding, you would broadly be more focused in energy, slight bit of materials, fair bit of technology, but a lot more negative on consumer discretionary. So that would be the sector tilt that you will end up holding if you look at the high yield portfolio in India. I think what I'm more concerned about when it comes to India would be a lot of your high growth names. Because the dispersion in terms of valuation still remains at record levels, and these growth names have now started seeing a meaningful earnings downgrade cycle. So I think that would be one area to be more cautious around, while still being more positive on the high yield pocket in the market.
All right, Rupal, we'll leave it there. Great speaking with you here on CNBC-TV18 as always. Appreciated very much. That's Rupal from Bernstein with the perspective on markets. We'll take a break here. Our first on the show, a list of top stocks to watch lined up next in just a bit.
Welcome back to Bazaar Morning Call. Hope you're having a good morning. For starters, the SGX Nifty suggesting a bit of a pullback. And as we mentioned earlier, a deep gash to start trade. Well, it may not be such a bad thing. If you get 130, 120 point downtick, well, that could be providing a good entry opportunity. That's about the index, but plenty of stocks to cover. Well, Sonia, you go first. You're tracking the truck sales that come out of the United States. Didn't look too good.
It didn't look too good. The main reason is because a lot of the production is going to start now in 2023 because the supply side issues are getting resolved. So that's the reason why for the second consecutive month, there's been a fall in the Class 8 truck orders. The orders have come in November at 34,300, which is a 20% fall compared to what you saw last month. Year on year, of course, you can't compare it to last year. I mean, the base was very low, so it's a 254% jump. But if you look at it, the total orders for the last 12 months now stand at a little under 300,000 units, so 290,000 units. Now, in September, just looking at that plate on your screen, in September, the total orders were about 56,500. Compared to that, it's fallen to 34,300. So the question that begs asking is, why has it fallen so much in 2 months? Now, FTR Transport, which is the company that puts out this data, has said that a lot of the production has moved to 2023, which means further moderation of levels as we get into December. The market is strong, though, despite all the economic uncertainties, and they say that the production will still be limited because of some supply-side challenges as well as labor challenges. Now, if you pull up a bar graph on the screen, you will see that compared to what we saw in July and August, November data is still quite good. It's just that in the last 3 months, the orders have tapered off. So the summary is that, yes, the market has picked up compared to 6 months ago, but in the last 2-3 months, it's been a bit volatile. The stocks to look at, Bharat Forge, red over there, GNA Axles, red over there, and you also have Motherson Sumi that has some exposure to the North American market.
Absolutely, and something to keep track of. Stocks, by the way, especially Bharat Forge, has moved over the last couple of months on the back of this data point. Now, RBI has revised securitization norms. Abhishek is standing by. with what the implications could be for the listed universe. Abhishek, over to you. Morning.
Morning, Prashant. So, to begin with, RBI has made amendments to the securitization guidelines wherein they say that any loan which has a residual overdue of less than 365 days cannot be securitized. So, that means that the lender, which is largely the NBFCs, they cannot securitize that part of the portfolio with another lender, let's say the banks. So, this is a transaction of securitization wherein, banks have a priority sector lending target which they meet through securitization with NBFCs. So this can have an impact on the overall securitization volume. Quality of loans securitized will improve over here. Also, shorter duration loans will get impacted as they cannot be securitized. The likes of MFI loans, that is microfinance loan, gold loans, etc., which have a shorter duration on the asset side of the balance sheet, that can get impacted. So watch out for stocks like M&M Finance, Indostar Capital, and the others like Muthoot Finance and Manappuram and so on. Back to you.
Okay, all right. Thanks a lot for that, Abhishek. Well, let's hop across to Vivek. He's joining to tell us about IRB Infra and IEX. Morning, Vivek.
Well, good morning. Two stocks. Well, IRB Infra, very strong toll collection numbers over there. So when you're talking about the November gross toll collection, it's up almost 6.1% on a month-on-month basis, coming in close to 366 crore mark. On a year-on-year basis, it's up almost 40%. But keep in mind, last year, the base year, you actually had the impact of no collections of toll on the back of the farmers' agitation. Now, coming to IEX, interestingly, what we have to keep in mind is the fact that the management had already given the numbers, but the earlier press release had indicated that the company's market share was at 95%. However, they've revised the press release to state that the actual market share in this month gone by was 91%. So clearly, there has been some impact of the competing exchanges that are ramping up operations and also offering discounts. But looking at the actual numbers, volumes have fallen on, down almost 17% on a year-on-year basis. The management attributes this to the higher impact or the higher contribution of REC, that is renewable energy certificates, that was there in the base year. However, electricity volumes grew almost 9%, and the day-ahead volume market actually grew up both on a month-on-month as well as on a year-on-year basis. However, the management commentary is subdued in terms of upcoming demand. They believe that improved coal inventory as well as the fact that the onset of winters will actually go ahead and reduce the volumes required.
All right, thanks a lot for that. Well, Vahishta is also joining in. She's tracking Natco Pharma that has received a favorable judgment. So I'm guessing green over there, Vahishta. What else are you looking at?
Hi, Sonia. First, let me start with Natco Pharma. You're absolutely right. The company has received a favorable judgment. The Delhi High Court has upheld the judgment that the Natco CTPR process does not infringe the FMC's Indian patent. And the next stock is Astra Micro, wherein there's going to be a board meeting on the 9th of December to consider a fundraise of up to 400 crore rupees, going with a green in both these stocks. Back to you.
Hey, all right, Vahishta. Thanks so much for running us through that list. Well, here's a quick recap of all the top stocks that we are covering. A few stocks with positive news flow. They include IRB Infra, Natco, and Astra Micro, while there are far more stocks that have been reacting to negative news flow, likely to react, that is. Bharat Forge, JNA Axles, Mahindra Financial Services, Shriram Transport Finance, Manappuram Finance, Muthoot Finance, and IEX. But yesterday, we saw a lot of large trades that did take place. And Vivek is back with us. Vivek, we were tracking that Rainbow and a few other names. Run us through the list.
Well, absolutely right. So Rainbow Children's Medical Hospital, this will be the stock in focus. So largely along expected lines, the CDC group yesterday in that large block deal completely exited its 14.45% stake in the company. Some very interesting buyers, in yesterday's block deal. So Abu Dhabi Investment picked up almost 9 lakh shares. Government of Singapore picked up 21 lakh shares. ICICI Prudential picked up over 17 lakh shares, along with some other marquee names. Next on our list is Go Colors Fashion. So Sequoia Capital India, exited a large chunk. They held almost 13.98%. They've exited, and now they post yesterday's block deal, they will continue to hold almost 10%. The buyer was Canara Robeco Small Cap Fund, but it'll be interesting to note when they go ahead and continue to pair stake as far as this particular name is concerned. Lastly, Gujarat Fluorochem, one of the promoter entities, Inox Leasing and Finance, sold almost 18 lakh shares in the open market. What we do understand is that, this particular deal is in line with the company's stated ambition of going ahead and trying to clean up the balance sheet across all three of its listed entities, so Gujarat Fluorochem, Inox Green, as well as Inox Wind will be the stocks in focus on the back of the company's initiative to go ahead and clean up the balance sheet.
Okay, thanks a lot for that. So those are a couple of more stocks to look at. But overnight, you had a big fall in the world of crude. Crude was down about 3%. Manisha Gupta is joining in to give us a roundup of all the action there. Manisha, good morning.
Morning, Sonia. Thank you for that. Well, yes, there has been strength in the dollar index trading at around 105 right now, and the treasuries got lifted up on possible aggressive Fed. This is after the U.S. factory orders, services sector, jobs data all came in higher than estimate. And we did see a sell-off in equities overnight as well, and that impacted commodities too. As of now, there is some bit of a green coming back right now, but the crude oil prices, as you mentioned, did decline 3% overnight. The markets are still reading into details about the price cap at $60 that has come in from G7, the European Union ban on crude, seaborne imports, that is. So all of that's still sinking in. Of course, there's a grace period anywhere between 45 to 90 days for all of this to take impact. And until then, Russia can retaliate, react to this. So that is what the street will keep an eye on. But there has been a decline in the metals as well. It was a one-way rally for the last 1 month, but we have seen prices come off. So gold prices fell nearly 2% overnight. Copper was down 2%. Aluminum fell 1.5% as well. And the markets are actually finding some feet in the Asian market right now.
All right, Manisha, thanks very much for that. So that's metals in focus. We'll take a break here. We are going to be joined by Deepan Mehta of Elixir Equities for some stock talk. Later, we'll also connect with Ramesh Iyer of Mahindra & Mahindra Financial Services to discuss their business outlook going forward. Stay tuned. Those conversations coming up. Okay, welcome back. There's about 30 minutes to go for the pre-open session. The SGX is indicating a 0.5% lower start. Deepan Mehta is director at Elixir Equities. He's joining us now to talk stocks. Deepan, great to have you with us here. Thanks very much. Good morning. Things have been grinding higher, Deepan, right? With the occasional setbacks like what we saw overnight in the US. What's the near-term thought process, Deepan, from here?
Yeah. Good morning, Prashant, and thank you for having me on your show. Actually, no complaints at this point of time. This is a perfect stock pickers market. All the bad news overseas have got priced into and the indices are at new highs. It's just that individual stocks have still to play a catch up. It's been a narrow rally, no doubt about it. But I think over the next few weeks or so, it will broaden pretty well. And we've had a decent earnings season and a few ideas have come through over there. I think investors should focus on stock sectors. And if they invest at this point of time with a 2-3 year type of a view, I think you should see very good outperformance over the next few quarters or so.
Okay, and just to follow up there, what are these stocks that you're looking at? Are you sticking with the large caps, the market leaders? If you had to, create a basket of say 4 or 5 stocks that investors can look at now, what would they be?
Good morning, Sonia. It has to be mid caps, no doubt about it. We are, I think, entering into a decent wealth creation phase over the next 3 to 5 years or so. And the best returns and the maximum wealth will be created in small mid-cap stocks. You could look at any sector, but I think the smaller companies over there will start to do much better than the larger ones in that sector. And apart from materials, I think we're very positive on all the sectors per se. And, you can go sector by sector. For example, banks and NBFCs, while HDFC, Axis Bank, and the 3 or 4 large private sector banks will do pretty well. The kind of companies which can really surprise you on the upside could be something like an IDFC First Bank or a federal bank for that matter, where there's scope for earnings to move up even sharper and price to earnings, price to book to do even better. Then on the consumption side, we're very positive on retail stocks, especially specialty retail companies, the new listings like Canvas, Manyavar, Campus Activewear, Ethos, Metro brands. I think all of these have delivered exceptional results. They have a great runway for growth. You could add a couple of QSR companies also to it. Very positive commentary coming through from companies like Devyani and as well as Westward, the other one, McDonald's franchisee. Yes. Yeah, that's right. And then there are such companies once you go down the line, I think whether it's real estate, whether it's capital goods, or whether it is automobiles, auto ancillary, I think there are lots of ideas over there in small mid-cap companies with decent management, good track record prior to COVID. And now I think they're just revving up their operations. So these are great times for someone who's prepared to put in the hard work and research good quality stocks and invest in them with a conviction over the long period of time.
Absolutely. I mean, when we spoke to the Westlife management last as well, they were so bullish on the business. And I think they spoke about a revenue of 4,500 crores by 2027 compared to what? Less than 1,600 crores that they are sitting on at the end of FY22. So they have a big vision as well. I take your point. There's a lot of conviction over there. But just stay on, Dipan. I do want you to listen into the conversation we're having next. It's with an NBFC. M&M Financial has hit its 52-week high yesterday after strong November business update. While the collection efficiency has improved to 96%, the asset quality has remained stable. The company has seen disbursals drop though. Ramesh Iyer, who is the Vice Chairman and Managing Director at M&M Financial Services, joins us now to talk about that. Mr. Iyer, good morning. Before I ask you about your own business, I just wanted to understand, the RBI has made some changes in the securitization guidelines, where they've said that loans with a residual maturity of less than 365 days cannot be securitized. Will that have any impact on your industry or your company?
No, so, normally we run a 3-year book or so, 30 months book. And if 365 days maturity cannot be securitized, normally that's not the portfolio which is offered.
Okay.
Always the portfolio that gets offered is where 6 months maturity is over and balance you have more than 24, 30 months left. So I don't see that to be a major change.
So this won't have any impact on your own business, right?
I don't think so. I don't think so.
All right. Hi, Mr. Iyer. Morning. When you joined us the last time around, we were trying to quiz you disbursals for the quarter, what it will look like. You said it will be at least 10,000 crores, but you didn't give us the upper limit. Now, in the first 2 months of this quarter, you're already around 9,750 crores. So you'll end this year closer to around that, 13,500, 14,000 crores odd. What's your sense on the disbursals front for the quarter? And also AUM growth, I think you were guiding for mid-teens, right? Stick to that?
Yes, so as far as AUM is concerned, it's an outcome of what is your disbursement. And clearly, we are seeing disbursements holding up to the level that we were wanting it to be. And if you recall, we did say that we've done 5,000 in October and we expect similar numbers because, November, there was a spillover of customers with vehicles not available sufficiently in October. We continue to see the demand pretty high on all products across the geography. So therefore, we don't have doubts in our mind that the disbursements will continue to be robust as we are seeing.
Okay.
Right. Just a quick point on AUM growth. Your broader guidance was for doubling AUM by FY25. So far this year, AUM growth is running at about 30%, sir. What should we expect? Will this kind of growth continue? What can you do? What levers do you have to kind of ensure that we see that going forward?
So far, the growth that you have seen is largely at the back of vehicles and tractors. And we also said that our SME book will be growing a little faster because we just got into SME financing, which we were doing a couple of years back and we had gone slow. And we do see good traction out there. I think also important to understand while there is a volume growth happening, we are gaining some market share, but we have yet to see the price of the vehicles go up yet. So once you start seeing in the next couple of years, even the price of the vehicles will go up for the same volume, you will see different disbursements. So, that's how we said by 2025, when we are talking about doubling of the balance sheet, give and take maybe 5-10% here or there, but the clear direction is towards that.
So you're saying there's good traction in SME financing. Got that. Your collection efficiency, can you just tell us what is the expectation as we move along the next couple of quarters? Do you expect it to improve further?
So we talked about it even last time. Normally, the second half is always the best for the rural market.
Okay.
And at the back of good monsoon, good yields expected, support price to be very, very supportive. We have seen decent price announcements. Put all this together, the farm cash flow is holding up and that will do pretty well. Infra has opened up. We are seeing good use of vehicles and construction equipments, and that side again is doing pretty well. The people movers at the back of tourism and people movement, the religious tourism is high. All of this together, I think the rural cash flow is holding up very, very well. And that's how we have seen month over month, our collection efficiencies have improved and the stage 3 coming down and stage 2 coming down.
Okay. All right. Mr. Iyer, I wanted 3 numbers from you. The AUM growth will be 15%, right? 15%. The ROA by the end of this year will be 2.5%. And NIMs will hold at around 7.5%. All these 3 numbers. So you want to revise any of these 3 numbers?
Okay, so I don't know where are you coming these numbers from, but definitely the AUM growth, as you see, it's already at that level of 15 plus, and confident that for the year that will hold up. So for us, the things are concerned, we have yet to wait what is the change in the borrowing cost happening even in this round. And I've always said passing on the rates to the consumers will be at a lag. And for NIMs, there is also a product mix change that normally happens when you do more of cars and more of personal segment vehicle. They come at a lower yield, but at the asset quality level, they hold up well. So therefore, at 7.5 could be a little challenge, but at the ROA level, we don't see the problem. And the 2.5% ROA is a 2025 number.
2025.
Answer is yes.
Yes.
Answer is yes for 2025.
Got it.
Okay. I just have one question. This is some feedback that we've got from a couple of investors that perhaps have tracked and invested in your stock for ages. Whenever the NPA cycle worsens for the sector, a company like yours tends to see worse ratios compared to your peers in terms of NPAs, whether it is Cholamandalam, Sundaram, Shriram Transport. They are able to weather the storm better than a company like M&M Finance, is the feedback that we've gotten. Are there any structural issues that you're seeing from your end that perhaps need to be addressed?
So we are very focused in semi-urban rural market, and a major segment we work with is an earn and pay segment. So therefore, whenever there is a volatility that you see in the rural market, either due to monsoons or we just saw due to pandemic, when these customers don't earn enough, their ability to repay starts to come under pressure. And we have always resorted to not rescheduling any of the contract at the retail level and hold it up there. But also simultaneously, what one must see is even the reversal when things starts to become well is fastest for us. Like, we saw first quarter of last year with the second wave of pandemic, our gross NPA went to 15%. And we said even that time that once things normalizing in less than 2 or 3 quarters, we'll see 85% reversal. And by March 22, we saw more than 100% reversal happening. So I think this particular segment in that geography has this little behavior pattern as to when things go tough for them, they do build up this overdue, but as they start, they reverse it back.
All right, Mr. Iyer, just one quick point from the last time we spoke. Now with this kind of collection efficiency, etc., that you spoke about, there is no impact that collection ban third-party agencies? I mean, we can put that behind, or that is still, you're monitoring it?
Yeah, no, very clearly, I have always said repossession is a necessity for any NBFC or any financial institution, because if the customers are defaulting, you have to take back the asset. Always during the festival season and the good period of the market, we don't normally resort to repossession. Customers do have their earnings and they do repay. We have never used agencies for our regular collections. We have only used agency for repossessions. And we will have to get back to using them as we continue to, start repossessing in future. Currently, it is no pressure on us. We are able to recover the money. We are even able to take back the assets in case some customers default. They themselves want to surrender as well. So there are three aspects of repossessions.
Okay, all right. Very quickly, Mr. Iyer, Mahindra vehicles as a percentage of a loan book is how much now, and where is that number headed?
So vehicle is roughly around 28%. Tractor will be about 15-16%. And we've always said about 45-47% of our book will come from the Mahindra vehicles, and the balance comes from the non-Mahindra part.
All right, we'll leave it at that. Thank you so much for joining us, Mr. Iyer. Always great speaking to you, understanding about the business, about the different segments. Dipan Mehta tracks this very closely. Dipan, I just want you to come in on that point, how M&M Financial generally, when the situation worsens, when the cycle worsens, they're not in the best place compared to peers. Is that a fair assumption? And what's your view on how to approach the stock now?
Well, it's not an assumption, it's a fact, Sonia. If you compare M&M's stock price performance over the last 10 years to some of its peer group companies like Cholamandalam, Sundaram or Shriram Transport, you will see that M&M has been a huge underperformer. And frankly, despite the M&M brand and the kind of resources that the group has got, a captive business when it comes to M&M vehicles, this company clearly has not lived up to its potential. Had invested in it for several years, right up to beyond the IL&FS crisis, and their NPAs just kept on shooting up, and managements kept on giving us hope that the NPAs would come under control, but they did not. There's a very high degree of volatility in their earnings. It's a great fair weather stock, when things are going fine. it does tend to perform very well. But the minute there are problems in the rural sector or in vehicle financing or in the NBFC space, then this company immediately gets into trouble, and it has happened time and again. So it's best avoidable from an investor's viewpoint.
Okay, avoidable from an investor's. Too much volatility. I mean, rides the good times, but suffers disproportionately during when things turn down, as Mr. Iyer himself pointed out. You know, we'll take a quick break here. We're about 15 minutes away from the pre-open. Here's some exclusive opinion, though, in the meanwhile. Laura Giritz of Rondio Global Advisors says she's optimistic about long-term prospects of India and adds that India is a rare market where penetration levels across industries remains quite low, and hence the opportunity, the runway for opportunity is longer. Listen in to some of that conversation.
One beautiful thing about the Indian market is it's broad. It's a broad, deep market. And so there's always opportunities in the market. It might not be Asian Paints today or Nestle India. It may be something else. But, you know, you wait patiently. You have your list of companies you want to buy, and you just wait for some sort of opportunity, you know, or something that gives you that opportunity to buy them. India is one of the rare markets, emerging markets allow you to do this, where you can build what we call umbrella valuations. The penetration rates in India are so low, you can apply it to almost any business in India with a good management team and just kind of let it do its compounding over time. If we look at PEs, they look high today, but if we look at market cap versus the potential size of the economy, the companies still have a lot of potential to just grow and compound through the years. Nestle India, Asian Paints, those are products that people need. They buy frequently. You know, whenever I go to India, I think, oh, geez, you just have to look around you and see that the potential for paint is extraordinary. And then the last facet of that is called platform. And again, this is not just an e-commerce network. This is also distribution network. And I think Asian Paints is another example of a company with a phenomenal distribution network. But I was invested in India decades ago. So we bought, you know, Asian Paints when it was a small cap company. So I look back at that, and, you know, when I started my new firm, I bought it again, and, you know, pretty much reassembled the same portfolio I had, and I've just held on. So, you know, I would point to that as one of my best buys, though. You know, buying that as a small cap company and just holding on. It was the only country in the world where there were expensive stocks where we didn't sell or take profit. And the reason is because I really believe this time around, you know, that the tides are shifting. You know, you're getting, you know, movement of more business to India. You have the country investing in infrastructure and development. And so I'm really optimistic about the long-term prospects for India.
Okay, well, before anything, tomorrow is our 23rd birthday for CNBC-TV18. So once again, to all our viewers, thank you so much for all the support and love over the last many years. You're going to be seeing a lot of big faces starting tomorrow through the course of the day. So it's going to be a fun day. In the meantime, we have Mitesh Thakkar and Kush Bora joining in to tell us how to approach the markets today. It's going to be a tough one considering the SGX Nifty is under pressure. So Mitesh, let me start with you. It's a 100-point gap down that we're looking at. Is this a time to buy the dip, or do you think that because, you know, there are a lot of events like the RBI policy, one should just perhaps wait and watch?
Good morning, Sonia. So last 2-3 days, you know, we've kind of changed our stance from buying or being aggressively long on the indices to taking profits and waiting for that dip to play out. I think the last leg of the rally, which started from 18,100 to about 18,880, is taking a breather. There is signs of hourly indicators turning down, pullback to the moving averages happening. So broadly, I think in the worst case scenario, I'm penciling in 18,450, 500 zone being revisited. That becomes my buying area. That's where key averages are placed. It's also a retracement area. So I think, you know, let this contraction phase play out and be buy on the lower side because the overall trend still looks healthy and on the upside. So it is within that period when you have some kind of a counter trend kind of a movement, and therefore you have to be patient and wait for your levels to arrive before you take a long position.
Good morning, gentlemen. Mitesh and Kush. What about you? How are you set up?
Sure, Prashant. First up, happy birthday in advance, and please do let me know where do I have to come for the party and the cake cutting. Great.
Prashant, you're throwing a party?
I think we're all throwing a big party tomorrow, right? Starting 8 in the morning. So you can join us on television, or we'll get the cake delivered to you.
A 23 kg cake, I hope.
23 kg, huh?
I hope so. I mean, it's a big milestone, right? Go ahead, Kush. You'll definitely be in for the celebrations.
Sure thing. Look, in the short term and the long term, the markets are just fine. However, what I'm concerned about is the medium term picture. Now, if you look at the options data on the indices, the global headwinds and the low wicks, this suggests that the market could remain in the range for a long time. But the FII flows and the positive sectoral churn that we are seeing, IT, metals, everything performing, the undertone will for sure be bullish. However, my concern is, regarding the wicks. Now, historically, whenever VIX hits the 12 zone or thereabouts, it stays in that zone 12 to 18, 12 to 17 zone for about a month or two. But the breakouts are usually very sharp, and they take the VIX to the range of 23 to about 29. And we know the inverse correlation that's there between the VIX and the markets. So my concern is that the VIX is spending a bit of time in the consolidation zone. The breakout could, however, not be such a great thing for the markets. We could see a bit of downside, but that's in the medium term. So you would want to take some profit home. In fact, even take some losses home for stocks that are not performing, and stay on some cash. And that is the medium term view. So on the in the immediate basis, Nifty, Bank Nifty, both seem fine. I would probably buy the dips, closer to 18,500 on the Nifty and 42,800 on the Bank Nifty. But, I wouldn't be deploying too much cash right now in the markets, given how things are set up.
Okay, all right. Got that, Kush. What about individual stocks? What are you going with?
So I have two picks. The first one is HGS, Hinduja Global Services. Now, we've been seeing, quite a bit of traction in the stock for the last couple of days. But what's encouraging is that it's crossed the resistance zone of 1400, and it's comfortably trading above that. We expect this momentum to continue for the first target of 1475 and the second target of 1525. A fresh entry here would warrant a stop loss at 1375. My second pick is Forgings. Again, this stock has also done well, but it's seeing a bit of a breather. But this is more of an entry opportunity. Anyone entering at these levels should have the targets at around 940 and 980 with a stop loss at 880.
And Mitesh, how about you? What would your stock ideas be for the day?
Yeah. So I have a mix of buys and sells for the day. 2 buys to about 2 sells. Sorry, excuse me. A buy on Coal India with a stop at 228 for targets of 240, and State Bank of India is a buy as well. Keep a stop at 609, look for targets of 635. On the sell side, a couple of auto names, Maruti and TVS Motors. Maruti is a sell with a stop at 8850 for targets of 8650. While TVS Motors is a sell with a stop at 1035 for targets of 985.
All right, gentlemen, we'll leave it there for now. Deepan and Kush, Mitesh and Kush, thank you very much for joining us through those trading ideas. Well, there's about 6 minutes to go for the pre-open. We'll take a quick break here. We'll come back with the pre-open rates. Baldev Prakash of Jammu and Kashmir Bank, J&K Bank, will be joining us to talk about their business outlook. Stay tuned for that conversation. Of course, market chat, market conversation continues as well.